It is no denying fact that in India, insurance products are sold in much larger number than in mutual fund schemes. And the reason can be many, but more often than not, I have seen that insurance are sold as an investment product and not something which is going to reduce the risk in the investor's life. And in this video, I am going to touch upon what are the ways they are promoting insurance product to their customers, what we as a mutual fund distributors can learn from them, remodel our pitch so that we can also compete with them for getting investment from our customer. Hello everyone, I'm Shobhit. I'm a Finbiz growth expert, founder of Finbiz Growth Club. We are an aspiring community of new age mutual fund distributors who are determined to change how India invests. So I am going to give you some ideas as and discuss with you some of the examples of how our insurance policies are being promoted into the market. I am going to discuss with you how they are able to get the mind share of their client, how we can remodel our own pitching so that we can get better outcome from our mutual fund distribution business. The first question which I want to ask you is, how many of you know what is the premium amount you are paying for any health or life insurance policy? If you remember what is the premium you are paying, I want you guys to type yes in the comment box. But I can bet you 99% of the insurance policy holders, they don't remember what is the premium amount which they are paying, either yearly, monthly, quarterly, or whatever it may be. What they remember the cover which they have bought for. So if you have bought any policy for say life insurance, they are going to remember whether the cover is of 50 lakhs or 1 crore or so on and so forth. Same way for health insurance as well. But in mutual funds, what we are doing, if you look at the mutual fund distribution community, more often than not, we are selling the premium and not the maturity value. Whereas in insurance, what is happening? They are never selling the premium because none of us are remembering the premium which we are paying. What we are remembering, what is the outcome which we are going to get. Same thing I want you guys to understand, that if we want to really change how we are going to be pitching this product to our client, we need to change how we need to interacting our value proposition to them. So let me share with you some of the examples and then we are going to go ahead as what we can learn from them. So I have taken a screenshot of a very popular website in insurance domain and look at their pitching point. They are saying invest 6,000 rupees per month and get tax-free monthly pension of 60,000 rupees. Now that is a very catchy headline. They have not mentioned for what time or whatever it may be, but what they are saying, you need to put only 6,000 rupees per month and then you are going to get 60,000 rupees tax-free monthly pension. That is going to be a very attractive proposition for your client. They are going to put only 6,000 but they are going to get 60,000 monthly pension. And most of the time, we as a mutual fund distributor, we are not talking about the outcome. Actually, what client is going to get, we are only talking about what they need to put in. Second example which I want to share with you is an example from one of the biggest insurance company in India, and I got one quote from them. Just understand what this quote talks about. They are saying if an insurance policy holder or a prospect who is of 30 years of age, if he is going to put 2,06,588 rupees for the next 15 years till life, till 100 years, he is going to get 2,02,000 rupees per annum in his bank account, and at 100 years, his or his nominee is going to receive 2 crore 93 lakhs 27,875 rupees. Now, this is a very good value proposition to put across. Only for 15 years, you need to put 2 lakh some amount, and then for the rest of your life till 100 years, you are going to get 2,02,000 rupees. That is a very catchy, if I may say, value proposition which the client will be able to remember. Now, not only that, beyond that, your client is also going to receive, or your nominee of the client is going to receive close to 3 crores. Now let me ask you, what is the return the client is making in this investment, if I may say? To your surprise, the return in this investment for your client is only 4.99%, less than 5% return. But the magic lies in the value proposition and the way it has been put across to your client. Only for 15 years he need to put 2 lakh rupees, and rest of his life he is going to get 2 lakhs, and that's not all. His nominee or he himself is going to receive close to 3 crore rupees. I want you guys to understand this kind of value proposition is going to make much more sense to your client instead of talking about large cap, mid cap, CAGR, and so on and so forth. Let me give you a third example. Just look at this example. What this example says, that pay premium for 7 to 10 years and you are going to get tax-free income up to 30 years. Now that is a value proposition which is going to be catching the imagination of your client. Only for 7 or 10 years you need to pay, and you are going to get cash back till 30 years of time period. This kind of value and this kind of communication, which is very simplified, which is not going into jargon, which is going to be helping your client in understanding the simple cash flow, that I think is going to be helping we as a mutual fund distributor to dive into this business proposition in a much effective manner. Now, most of the time, since I have worked this industry for more than a decade, I have realized that most of the mutual fund distributors, they talk the language which has been put across by mutual fund companies. So they are going to talk about CAGR, alpha, beta, multi-cap, small cap. Often we forget, my dear friends, that these numbers and these jargons doesn't make much sense to our client. We need to simplify our offering. Just all these three examples which I have shared with you, where the company has talked about the scheme, where the company has talked about the fund, where the company has talked about the performance. We often forget it is not about us, but it is about our investor. We need to put our communication in a simplified manner so that they are able to understand. And I think some of the MCs are able to put this value proposition in an effective manner. So what I want you guys to understand and simplify, the first mantra which I want to give you, my dear friends, is to always plan the investment journey of your client by taking some emotional goals for which they will be motivated to do those investments. Instead of talking about 5,000 rupees SIP, 10,000 rupees SIP, or 50,000 rupees SIP, if we are able to show them what their ultimate achievement they are going to have, that would be much more fruitful. Just to give you an example, we all are aware of rule of 15. If your client is going to put 15,000 rupees per month in a portfolio which is going to give 15% return, then your client is going to get 1 crore as maturity. So that is going to be a much simplified version, if I may say, where you are going to show him the goal for which your client will be motivated to go. Instead of talking about premium, you are going to be talking about the maturity value, and I think that can be a very good value proposition to put across to your client, and that can be a very simplified version which we need to be talking to our client. The other way which we can put across our mutual fund investment proposition, which I call as what in and what out. Now, what this means, we can, if we are able to club two value proposition in a same manner, that can be a very good way to go. It means what? If you are able to club SIP with SWP, it is going to give you a very good cash flow visibility in front of your client. Now, what this means, if you are able to say, you do SIP for say 5 years, 10 years, 15 years, 20 years, and then you will be able to get X amount or Y amount for this much period, that is going to make much more sense to your client. And let me share one simple example with you, and I think you will be able to resonate with this. So if you look at this example here, what is happening in this example, the company is proposing that if your client is going to do 10,000 rupees SIP for the next 8 years, he will be able to get 10,000 rupees per month lifelong. Now, this value proposition is going to be much more easier for your client to understand. The technicalities can be the investment return is 8%, 12%, and the withdrawal is happening at the rate of 8%. Now, you can dive into the technicalities on your own. But if we are able to put this value proposition to our client, that if you are going to put 10,000 rupees SIP for 10 years, you will be able to get 15,000 rupees per month in your bank account lifelong. That can be a very simple value proposition to put across. 10,000 rupees SIP for only 12 years, and your client is going to get 20,000 per month for rest of his life. This kind of, if simplified version of investments, if we are able to put across to our client, I have no doubt that we will be able to create a much better value proposition in our client's mind. More importantly, it is going to simplify our life. We are not going to talk about those kind of various technicalities which our customer has never gone through. And this simplified version is what helping insurance companies to get lot of business from investors and customers. If we are able to look into this kind of selling perspective, I have no doubt that we will be also able to compete and grow our business as insurance advisors are doing. So I want you to put some thought on it. I want you guys to create your own strategies as how this can help you to simplify the conversation which you are going to have with your client. First, I'm going to repeat again. The first thing which you need to do is start chasing some goals and creating some goals which your client would be ready to chase. So it can be a flat out some numbers, say 1 crore corpus, 2 crore corpus, and so on and so forth. Or it can be a cash in, cash out kind of a proposition where you're going to say you put your investment for X amount of years, and for Y amount of years you are going to get this much amount. So if you remember the second example which I have shown you, there the same value proposition has been discussed with you. You are going to be putting money for 15 years, and for the next 65 years, you are going to get consistent cash flow. Now, if this example you are seeing, as I shown you, that it has been giving only 5% IRR or return to our client in mutual fund investments, even the worst investment scenario, the client can get much better outcome than this investment philosophy. So it is only how we are going to be putting across the value proposition to our client. So I hope I have given you some new food of thought. I have given you some insights as how we need to remodel our approach of going into the market, which we keep on discussing in our community. Our community of aspiring mutual fund distributors, we are simplifying their arguments, their approach, so that they are able to address majority of Indian population which has never invested. In case you love the content, I would love you guys to hit that subscribe button, give us a thumbs up so that we will be able to reach like-minded people. Thank you for watching. I'm going to see you next time.